You're listening to Melt Banana. They're so hard that by the conservation of hardness in the universe, you won't have any hardness left for your cock.
Oh, man.
Hello! Welcome, everybody. Today's Wednesday, June 13th, and we're bringing you episode 106 at block height 527,297. And that clip was, I guess, the only cock joke we could think of that didn't cross the line into too inappropriate.
Yeah, I think we're already crossing the line a little bit by just going and grabbing Satoshi's artwork there from Satoshis.place.
But yeah, Mr. Shinobi Monkey here, and it is my pleasure to introduce Mr. Rick.
Hey, everybody. Everybody's week's going well.
Miss Janine.
I hope you feel the burn, Tezos.
And Actix.
Hey.
Sadly, No Para is recuperating from some jet lag, and JW's taking a little bit of a hiatus, kind of getting his own thing off the ground. You know, wish him the best of luck on that. But I don't know. We want to get to it, and oh my God, SPV is horribly broken. Bitcoin can't work anymore. It's you can't trust wallets and Merkle proofs. But only if somebody's willing to spend millions and millions of dollars. So
yeah.
I'm pretty sure. Whoops, recursive screen share. 1 second, and there we go. So I'm betting that everybody's seen this weakness in the Merkle tree design for Bitcoin so far, and honestly, it is not that big of a deal at all. And before I really get into breaking it down real quick, I just want to let everybody know that this is something that developers have kind of known about since I think like 2015 or 2016. Luke Jr. was actually on Twitter saying that he figured this flaw out after one of the first scaling Bitcoin conferences. So this isn't some new thing that just popped up out of nowhere that nobody knew about. But yeah, it's not really that complicated. I mean, pretty much the problem here is that there's really nothing in a Merkle proof that right now absolutely shows the depth of the Merkle tree. Yeah, for those not really too familiar with it, obviously it's just the root branching down with the hash combinations or nodes until it gets all the way to the leaf edges, which is pretty much all of the transactions. And a single pathway from that root is pretty much just showing inclusion, and by itself isn't really anything that can definitively prove the depth of the entire tree. And so what this allows, if you are willing to throw a few $1 million at ASICs to pretty much kind of grind things out, sort of similar to how ASIC Boost works, it allows you to take the leaf node or an actual transaction and finding hash collisions with that transaction ID if it's of the appropriate length, 64 bytes. You can actually, in this diagram here, it kind of spells it out, fake a air quote transaction below a real transaction and try to make the legitimate transaction look as just a node kind of higher up in the tree committing to this fake transaction that you insert in the bottom, because of the fact that there is no real definitive like proof of the depth of the tree. And so really what this would kind of involve is a series of transactions utilizing anybody can spend pretty much to allow somebody exploiting this attack to mine it themselves and recover all of the funds that are used. And pretty much the long and short, if you have enough Bitcoin, I think the figure is a couple hundred, you can kind of grind through the amounts in outputs and a small chunk of the lock time field until you find that collision, and then structure this chain of transactions to include in your own block and kind of accomplish this kind of spoofing. And like, honestly, this is really not big of a deal. It would require a large amount of Bitcoin up front, literally millions of dollars, plus millions of dollars of investment in ASICs to be able to brute force this in any kind of reasonable time, and would only be able to fool SPV wallets. And yeah, pretty much the two solutions to this that don't require any forks at all would be to, one, show the Coinbase transaction, or provide the data to reconstruct the Coinbase transaction, which would give you a definitive depth of the tree. Or in the event of a Merkle tree with an odd number of transactions, show the rightmost branches, because in the event of an odd number, they pretty much duplicate the last transaction to allow the tree to actually be hashed. And that would kind of show, the two duplicates at the right end, that this is also the depth of the tree in the same way a Coinbase would. And so, I mean, honestly, you can kind of go over Sergio Lerner's blog post about this, but this really is of no practical concern to anybody. The cost to exploit it versus the gain you could realize from it is just not really practical. And at the end of the day, it's only really a weakness for SPV wallets, and no sane person is going to be accepting transactions in the amounts required to pull this off without using a full node to verify it. So, I mean, like, at the end of the day, this is really more of just kind of, in my opinion, an intellectual curiosity, and not really anything that would be practically exploited in the wild, kind of like selfish mining attacks. So, dun dun dun. I think that is the shortest rant that Shinobi has ever gone on about a technical topic.
It's like you're saying, it's been, observed for a while now, to where it's like kind of understandable that it's going to take a lot of funding to try and actually get something out of that attack. And I don't know, it's just one of those things where, to me, it's like, once you start getting into this attacking Bitcoin, it's always costing so much money that you really kind of, I don't know, to me, it really is like, always, why are you doing this? Because you're trying to destroy this sound money proposition, and you're doing that by wasting a bunch of funds. I don't know. To me, it's one of those things where it's like, you just really, it's kind of nonsensical to try and attack the network and really take it down. I mean, the whole thing with the SPV wallets and being misguided from faulty nodes and stuff. I remember when the SegWit 2x stuff was going on, there was a lot of discussion about that, because I guess it would have been a heck of a lot easier to sort of just take all those nodes and move them onto that chain. That's not, I guess it's not even really a similar attack, but I mean, yeah, I don't know. The SegWit 2x thing, I remember there was a bunch of like shady stuff going on there, where my node kind of couldn't sync all of a sudden because it was getting some bad data. And I imagine there's always a little bit of game theory going on there with participants in that network, just trying to, see if they can get an edge somewhere.
Mm-hmm. Yeah, with with 2x, it was pretty much just the concern about miners actually moving over to that and the chain having greater work. And for those who forget, Andreas Schildbach, the maintainer of Bitcoin J, the library pretty much most SPV wallets out there use, actually by default inserted a few 2x nodes as DNS seeds to pretty much guarantee SPV wallets using that didn't remove it would be kind of cycling into 2x nodes and probably have a few on their peer list. So never forgive, never forget.
And run your own full node.
Mm-hmm. So I guess that little short explanation is out of the way, Janine's got a few stories in a row to cover. You want to take it away, Janine?
Yeah, the first story, which is you know, the one that inspired a lot of elements in today's artwork. In the last few days, there have been two new things that have grabbed people's attention with regards to the Lightning Network development. Alex Bosworth shared a demo of a pay-to-email feature called Hashcash that he's building for y'alls, which, if any of you are not already familiar with, is basically a monetized microblogging platform to test the Lightning Network. And the interface for Hashcash looks pretty simple. You just input a message, click send, and I presume when it's actually up and running, you will be able to send a micropayment of a few cents in order to have your message show up in Alex's inbox or anybody's inbox who implements this. And the reason it's called Hashcash is, of course, in reference to the proof of work system that Adam Back made back in 1997 to limit email spam and was one of the precursors to Bitcoin. So it's all full circle. I enjoyed that reference. The second thing, which got quite a bit more press in Lightning Network news, is called Satoshis.place, and it is a Lightning-powered online collaborative artboard made by someone who goes by Lightning Koala on Twitter. He apparently attended the San Francisco Bitcoin Dev Meetup yesterday, so if you were there, you might have met him. This artboard is made of 1 million pixels, which cost about 1 Satoshi to paint and can be painted over indefinitely, so even if you buy a bunch now to make a picture, someone else can come along after you and fill in the space with something else. For example, if you want to paint something consisting of 600 pixels, it would cost you about 4 cents in Bitcoin priced in US dollar at the current price. And as you can see, at the moment, there are still a bunch of references on the artboard to people like Jihan Wu and Roger Ver and the Bitcoin Wizard, and a few logos for different projects like Eclair and various famous paintings as well, and other symbols of internet culture in general. But you know what else early Lightning Network adopters are kind of fond of, apparently? Male genitalia, and lots of it, because as NextWeb pointed out, there was at one point over 100 drawings of something resembling a male sex organ on the board, including ones placed provocatively next to people's mouths. And that number keeps going flaccid. I mean, it's fluctuating. Koala was quoted... Koala was quoted as saying that he did not expect this kind of response, but thinks that it is creative and majestic. Those are quotes. Theatrics aside, I think specifically those quotes were about the male genitalia showing up. Theatrics aside, I think we should be pleased, as David Harding pointed out, that this artistic experiment has not only been working, but it hasn't stressed Bitcoin's block capacity at all. He tweeted, "Were all those people opening channels driving up transaction fees? The answer, it seems, is no. Lightning enables silly fun like CryptoKitties, but without killing capacity. So take that, meth heads." I don't really see why everyone is so down in the dumps at the moment about the Bitcoin price. Like, come on, guys, what is wrong with you? 600% gains in a year is not enough for you. How about all of you? I think
Jimmy's been playing that Bitcoin game a little too long.
I think you all should be more cypherpunk like Jameson Lopp and Elizabeth Stark. You should hug a bear and share some micropayment dick pics.
Yeah, man, this thing is awesome, honestly. Like, I was digging through it last night and trying to do like a BD Block Digest artwork, and yeah, it wouldn't cost that much. And like, it's changed a lot since its inception. It immediately went to, you know, all the penis references, and I think that's just like, that's not necessarily the Lightning Network. That's just the internet, right? It's like when
punks draw cocks.
I think the internet is just like, it's like got this natural tendency towards, you know, sexual objects and racism. Like, those are the two things where those things take off. So I mean, like, initially it took off, but I mean, like, I went and visited it this morning, it was completely different, and then when we pulled it up just now during the show, it is even different again. Like you're saying, you know, you can draw over it, which is interesting because it seems like wasn't the $1 million web page that was built, and it was like once you bought the pixel, it was solid, like that's it. And I don't know, it's just an awesome thing. And like the whole Hashcash to stop email spam, another awesome thing. And you know, like that tweet just said, talking about how this isn't really bloating the transaction fees or you know, anything on the actual chain. It's incredible work. Like, yeah, the price may be somewhere where people aren't really excited about Bitcoin, but there's a lot of developments going on that are really interesting to see. And like, you know, this Lightning Network, it really is going to be the thing that kind of, you know, saves us from all this spam. So it'll be interesting to just keep seeing it getting developed. And, you know, things like this, I love artwork. So Satoshi's Place, it's rocking.
Like I've said all along, you know, it's layer 2 is going to be nothing but dick pics. And here we are. And it's nothing but dick pics. And it's fantastic. But I can now see kind of this is like that very, just the hints of it as being the very root or basis of like a new kind of internet, like spawning out from here, like meshing and incentivizing growth of the network itself instead of like ISPs managing all this work. And I think that just seeing this kind of stuff kind of hints at that in very subtle, small ways.
Mm-hmm. And there's, you know, there's a lot of like, you know, ideas for improving this that I've seen floating around out there and kind of, I don't know, making it a less chaotic. Like, for instance, I've seen an idea of, you know, potentially having a kind of like a time-based limiter where, let's say, a pixel is filled in and then rapidly filled in again, pretty much have like the price for that pixel spike. And then as long as like people are constantly drawing over it, like that price would pretty much go up each time that pixel was filled in until like it kind of calms down. And then after like a timeout, the price start coming down. Or for instance, let's say like somebody fills in a pixel, like have the person who drew that effectively kind of buy that like a property right, and then establish their own selling price where like they would get a cut of the money from whoever filled it in afterwards. And just kind of like a lot of different ideas on how to kind of play with the economics of it and how that would affect you know, just how I don't know, I guess how many dick pics pop up, and see how elastic the demand for dick pics are in terms of pricing.
Yeah, I imagine when the price goes up, we'll see less of those and more like, I don't know, maybe Satoshi's Place will find it's like, it's, you know, a little bit more permanence whenever the price rises.
Mm-hmm. Dun, dun, dun. Something Janine wanted to comment on a little bit. Some nice art is not involved.
Yeah. So once again, nudity is a common theme in this show. But I wanted to show this because the Lightning Network artboard is actually not the first instance of a art project that incorporates Bitcoin transactions in order to fill in or paint pixels. This is I don't know what number piece it is. There's been at least 2 that I've seen, but this is a fundraiser that Ross Ulbricht's family did for him, where he would send them a pencil drawing that he had made while he was in prison, and they would raise money by digitizing it and then covering it in this case, a layer of gold squares, and each pixel would be, you were able to purchase it, and that would make it disappear to reveal the drawing that was behind it. And I think you could purchase as many as you want. And obviously each one has a certain Bitcoin amount on it. And so you would send a donation that way. So yeah, I think there's a lot of different ways that now that it's, you know, we have this option to use the Lightning Network and make micropayments. I think more projects like this are going to start popping up, because I think it's a really cool way to not only interact with art, but also it makes it a lot easier for artists to actually get money for their work if you kind of gamify it in this way.
Right. That's where it's like the content creation market has been very hard on artists and everybody, just like actually getting paid for their work. And so it is amazing. It is like, maybe we are starting to see this, second internet pop up where it's like, there's an actual cost tied to things. And right now it's like a very, still in beta. Things are getting, just pushed out right now as far as implementations. So, but I mean, there's like an actual Bitcoin cost to the end of this stuff. So, I mean, it should get rid of a lot of the spam, and it should help reward some people that are, currently not getting their, their penance for their artwork, I guess.
I mean, it's like, it really is going to be a fucking weird experience seeing how people kind of apply, micropayments to different things, because it's like, it really is just opening a whole new door. Like when you start making it practical to make payments of these like sizes, like it's literally just the Wild West. Like whatever you can come up with, wherever your imagination goes, you can attempt to monetize it and actually see how the market reacts to it. Like see if people will price or value these kinds of things. And I mean, like, I'm just imagining something like this on steroids once 4chan gets their hands on it.
Yeah, I know. And I'm thinking about, the same thing. It's just like, what can you do with microtransactions and all this sort of like different areas of content creation and just the different ways that you can, test these markets and see how they work and if they're going to be more efficient than the traditional models, which I'm thinking they will.
I mean, it's like it's gonna get fucking weird.
Let's get
weird. I guess. Before I pass it off to you, Rick, I guess I'm just gonna dive right into this real quick. I was planning on just kind of mentioning it at the end, but figured it kind of fits in right here. But I saw this post on Reddit a little while ago and thought this was actually a pretty nice idea of how to kind of apply Lightning networks. Like, we've already kind of seen the y'all's inbox that Janine just covered and things like earn.com. Well, somebody's here, or what is it, Brain Hacker, is proposing the idea of pretty much applying this kind of spam filtering to actual phone calls, with kind of the concept of having a payment required to actually allow a call to go through in the first place, and then some kind of time threshold, like 2 minutes or something, where if you actually stay on the phone for that length of time, then it would pretty much refund the amount, kind of showing you actually like consider this a legitimate phone call, not some kind of spam. And, this, where else can you kind of apply this kind of spam filtering? Because I don't know about the rest of you, but I am really starting to lose my fucking mind at these early morning phone calls from telemarketers to my cell phone. Like, and it's ridiculous. Like it is literally against federal law to pretty much like telemarketer call somebody's cell phone.
Not only that, but I mean, have you been seeing the patterns and the trends where they're using like the local area codes to target people now? Like it's absolutely there should be protocol or at least some kind of limitation against that. That's ridiculous. Like people should be calling from the codes that they're in, basically. I mean, yeah, you could go out to another area or you can ask to have a phone number from another area, but I mean, it just seems ridiculous the way that's working right now. It's like, what is going on? The telephone system.
Yeah, I mean, it's just another place where there's definitely a little bit too much just spam running through. So it'd be nice to clear that up. Maybe have just like a Bitcoin phone sitting there where when that phone rings, okay, I can answer that phone. The other phones, it's going to be BS.
I mean, it's, it's like, just like take it to like the most absurd extreme. Like getting access to a public building. And I mean, it's I don't know, it's probably a bad idea, but you know, even in instance of like, you know, public services, like they get fucking crank calls like all the time. I mean, like there's just like anywhere there is just a huge noise to signal ratio, you can plug this kind of thing in and really just, I mean, like in the world we're living in today, like with the amount of information being created and propagated, like there really is no other viable solution to kind of sort that in my mind right now, aside from just webs of trust, which we've seen historically have big problems scaling to kind of filter that noise out. I mean, like nothing works like introducing an actual monetary cost to something.
Oh, so what I meant by the area code thing was that they're matching not only the area code, but the same 3 first digits of whatever number you're using usually. It's a pattern that I've been noticing in a lot of the spam calls. So they get familiarity in the number because, oh, it may be a relative or someone else who has, who got their phone at the same time or something, right? So it looks semi-familiar. So I think that's why that tactic's being used, but it's just really annoying because they can't be successful doing this. It just, to me, it's like harassment. Like, where's the harassment laws?
Yeah, and I mean, it's like it is literally against federal law to pretty much cold call people on their cell phone, and like explicitly with like I've been getting a lot of political campaign calls and shit, and just the fucking audacity of that is beyond me. Like it is literally actually like people involved in a political campaign just blatantly violating federal law to pretty much harass voters. Like it's fucking absurd.
But this is why we need Bitcoin and why this is like really, it's like, I don't know. We're never really going to get the answer from that side. It's just like, I mean, they're going to try and always get you to vote their way or buy their thing. And, there's not really anybody to cry to, but we create these solutions that can fix these problems.
Well, speaking as the person who is mostly phone free, I have a dumb phone, and the worst, I mean, I have it on silent most of the time, and I think the only times I've ever gotten calls when I've actually checked calls is from random people who just call the wrong number. I don't think I've gotten any scam calls like that. So I do not have this. I'm aware that other people have this problem, but I do not personally have this problem because my solution is to not use a phone. And if I do use a phone at all, I give it out to a very small number of people. So
you're ahead of
that kind of fixes it.
That's literally what woke me up this morning. I got a fucking spam call from a solicitor like 20 minutes or something before my alarm was going to go off. Like that, like literally half of the time, that is what wakes me up in the morning.
Yeah, it's so prevalent, really. I don't even get mad at them anymore. I'm just like, all right, wrong phone number or hanging up. And it'd be nice to have like a dumbed down phone and sort of just know that whenever I get a call, it's something that's relevant. But yeah, you got to wait for that Bitcoin phone.
Yeah, I literally just answer the phone and just whistle as loud as possible in their ear until they hang up. It's pretty much just what I do at this point. But I don't know. To move past the woes of the spam calls, I kind of goofed up the story order. You want to take us through this referendum in Switzerland before we pass it off to Rick, Janine?
Yes. So this is a bit of an old story. It happened 3 days ago. It's now old. But on June 10th, Switzerland did something that not many, if any, countries do in the world, which is they held a referendum on the fundamental structure of their monetary policy. And because Switzerland is a direct democracy, if at least 50,000 people sign an initiative to either introduce a new law or challenge a law passed by the parliament, then a national referendum is triggered, and the initiative that was just voted on was called popularly the Sovereign Money or Wohlgeld Initiative. And the crux of what was voted on, at least from what I can see, has not really been explained well in the media or even by the campaigners. which is why I think I wanted to clarify a bunch of things about it. So the Sovereign Money website, in their statement about the results of the referendum, says that the vote was about the privatization of Switzerland's money creation. And while this is technically true in the spirit of the vote, most people are not familiar enough with how the financial system works to make the distinction between credit liabilities and money. And that was not clearly explained in a lot of the stuff that I looked at. And so this vote was about, in actuality, it was about whether private banks should retain their ability to operate with fractional reserves, lending out more money than they hold, or if the Swiss central bank should be given a monopoly on the ability to generate electronic forms of credit as well. So they're not generating physical money. That's not what the referendum was about. It was about, should private banks, commercial banks, have the ability to create credit, which is essentially, inflation of the electronic form of money. Because in the in electronic world, there's not much of a distinction, even though there is legally credit clearly has a different distinction from actual money, because it's a liability and not a positive asset. And so the idea behind the Sovereign Money Initiative was that if the central bank of Switzerland held this monopoly, then financial crises would be less likely. And this is a quote that I think summarized it well from Reuters' Breaking Views, where they said the idea that bank deposits should be backed by safe assets is not new, but has enjoyed an understandable revival since the 2008 crash. However, no modern economy has attempted to put this theory into practice. The Swiss Sovereign Money Initiative, known locally as Vollgeld, would therefore, which translates to, I think, full money, because full is full in German, would therefore be a radical experiment. The basic idea is that the Swiss National Bank should have a monopoly over creating electronic money, just as it does over physical notes and coins. This exposes a crucial but little understood difference between central bank reserves and deposits that customers entrust to commercial banks. We tend to think of both as money. They can be both used for payments and converted into physical cash. But while the central bank can always honor its claims, regular banks cannot. This makes lenders vulnerable to a sudden and potentially devastating loss of confidence. So that was basically the perspective of the Sovereign Money Initiative, that was trying to get people to vote to approve that the Swiss central bank should take over that role as well and not leave it to private banks. So interestingly enough, the Swiss government actually opposed this initiative. They were opposed to the idea that the Swiss National Bank should be given a monopoly on this, which I thought was interesting. And the result of the vote, by the way, was about 25% approval and 75% rejection. So it did not pass. The day after the referendum, there was an article in Forbes titled "Almost 500,000 people in Switzerland voted for a Bitcoin-like financial system." And while it is true that the journalist who wrote the article cites a number of influential figures in the initiative, including the Swiss National Bank president and a board member of the group who proposed the Vollgeld referendum, they were giving praise to cryptocurrencies, blockchains, and distributed ledgers. I think this Forbes journalist misrepresented the extent to which the result of this referendum was a statement about Bitcoin, because Bitcoin was not in any way part of the referendum. And the referendum wasn't even about, whether to limit the money supply like Bitcoin does. Now, don't get me wrong, Switzerland and Swiss banks, compared to other Western countries at least, are very receptive to Bitcoin. But I think the meaning of this referendum result was misrepresented. If we have any Swiss people in the audience, though, feel free to correct me if I'm wrong on any of this. I don't think the current fractional reserve system is optimal in the slightest, but the idea of giving authority over money or credit creation to a central bank is not exactly a position that fits in a Bitcoin-like financial system, because as Ian Griggs said years ago, one of the innovations of Bitcoin was that anyone could participate in the money creation process as long as they followed a well-defined set of rules agreed upon through consensus. And so since this wasn't really a referendum to limit the money supply, that's not a Bitcoin-like financial system. And saying that a national bank should have a monopoly over that not really not really that either, because even the article that Satoshi included in the Genesis block was about how central banks can do fractional reserve too. Like there's nothing stopping them from doing it. Just because they would be the sole entity responsible does not stop that from happening. So I just thought it was interesting how Bitcoin was brought into this story, because I didn't really see evidence of it being there outside of some of the people saying that they, approved of Bitcoin. And either they don't understand how Bitcoin works, or the journalist who was quoting them was taking their quotes out of context, which I think is probably more likely.
Yeah, I mean, I was looking at this, and yeah, it didn't really, I guess, have that much to do with Bitcoin. I just think maybe it has to be, though, that like the whole Bitcoin and cryptocurrencies in general have like just put out there that, the way that the current system is run is a problem, and we'll maybe start seeing more of these, people trying to counter that problem. I mean, here in the US, they've talked about maybe going back to the gold standard, just because it's something that they can maybe, say that it's not as bad as the current situation with just runaway inflation. So, I mean, like, while you're right, it's like maybe it's not that much to do with Bitcoin. I do think that it is a lot to do with like Bitcoin has helped sort of push this into the consciousness of like there's a problem with the way your banking system is being run. And maybe that's why 500,000 people said that, they kind of agreed to it, even though, it wasn't really well put together or campaigned, and, the government was against it. And I mean, it still had a lot of people vote for it just because they know that the current situation is not ideal. And so, yeah, I guess it's not, it's not refined. It's like the first thing that's sort of come up as far as a referendum towards like a country's banking and monetary system in a long while. And I think maybe that's why they threw Bitcoin in the title. But, that's just my own speculation as to why he did that. But, I mean, really, I'm excited to see the discussion about it. I'm excited to hear people around here say that, we should maybe move back towards the gold standard or something, to where it brings in a competition to where the banking system understands like, okay, it's not just a runaway, we own the game situation anymore. Like we've got to dial it back, and we've got to get competitive, because this situation could it could run over us, like we could they could be, like we've been saying for a while, is like Bitcoinization could just sort of take over and sort of leave them just irrelevant, which, I mean, like we know that's the way it's going, but I mean, it could happen a lot quicker if they don't get competitive. So maybe we'll see more of these type of deals in different countries.
Mm-hmm. Yeah, I mean, I think that's really the biggest takeaway here, is that they're actually looking at the flaws in the financial system. I mean, in America, it's, I don't know, either you just have no clue what's going on, or you just scream the Fed is evil because Rothschild conspiracies, and don't actually understand really any of the underlying dynamics as far as how things actually work.
Yeah, and I also, maybe it would be a good time to also bring up the other article that regarded Switzerland, which was about how there's some commercial banks who are coming out and saying they're willing to work with businesses dealing with cryptocurrencies, which I also think was another story that was kind of misrepresented as well. Of course, it was a Bitcoin.com article. So no surprises there. But I think the crux of that article was basically that, I mean, it doesn't really surprise me. I don't know why it's news, because I've already heard that banks in Switzerland were willing to work with businesses that deal with cryptocurrencies. I guess they're just now being more enthusiastic about that position. So we have one commercial bank called Hypotekar Bank. I don't know how to pronounce that. It's even hard for me. We have a commercial bank in Switzerland saying that they're willing to you have businesses come to them and have accounts with them that deal with cryptocurrencies, and that's basically it. And they've gotten supposedly they're either looking for clearance from FINMA, which is their financial authority in Switzerland, or they have gotten clearance to do this. So it doesn't really surprise me. Again, like Switzerland's very receptive to Bitcoin.
Yeah, that's really like kind of just like, yeah, a good example, I guess, of just like how Switzerland is kind of taking the lead in this whole like revolutionary banking thing. But you just sort of gave me a perfect segue into my stories there with India, because the Reserve Bank of India there, they a few months back, I think you guys might have remembered, they kind of just had a knee-jerk reaction. And back in April, they said the Reserve Bank of India, this is, we're not talking about Switzerland anymore. India said, this is back in April, they made this statement. They said, it has been decided that with immediate effect, entities regulated by the Reserve Bank of India shall not deal with or provide services to any individual or business entities dealing with or settling virtual currencies. Regulated entities which already provide such services shall exit the relationship within a specified time, which was 3 months, I think, back then. A circular in this regard is being issued separately. And so, yeah, and then they said, back in April, they said as to why they were doing this, they said, internationally, while the regulatory response to these tokens are not uniform, it is universally felt that they can seriously undermine the AML and FATF, the Financial Action Task Force framework, adversely impact market integrity and capital control. And if they grow beyond a critical size, they can endanger financial stability. And in that, back in April, they decided to go ahead and take action against cryptocurrency exchanges and businesses working with cryptocurrencies, saying that they've got to wind down, or they call it virtual currencies, they've got to wind those businesses back, and they've got to, end those relationships. And, but, now that it's been a few months since that was back at the beginning of April, we've had some lawyers sort of do some diligence over there and file what's similar to a FOIA here. It's called an RTI, a right to information. This lawyer, he's on Twitter, called Blockchain Lawyer, I think. And, his name is, Varun Sethi. And he's a lawyer based out of New Delhi. And he filed that RTI, which basically showed that the RBI, the Reserve Bank of India, had no real evidence that says like they should be banning this, and they should be, closing all these businesses. And, they didn't do any research as far as like what other countries were doing as far as regulatory framework. They didn't do that. And they didn't look into what kind of business was being done there in the country. It was just sort of seemed like a knee-jerk reaction to just the space blowing up and not knowing what to do about it. And, it's caused some troubles there in India. I know that Uno Coin and a lot of those exchanges over there had some real worries whenever this information came out. But, we got this lawyer over there working the case, and it looks like, they're getting some pushback now as far as like, look, you can't just tell these companies that they can't do business and stifle innovation within the country just based off of, just arbitrary decision based within the RBI. So it's something where, in Switzerland, like, they're being friendly to these businesses. Here in India, they're taking a much different approach. And, it's kind of those things where it's like, it's going to be a problem for them if they really did push that agenda to try and outright ban these things. Because there are countries that are going to be favorable to it, and this really is sort of the future. So if you just try and stifle that innovation, it's putting you in a bad place. And so they're getting some pushback for trying to stifle that innovation. And hopefully we'll see within the next couple of months a lot more measured approach from the Reserve Bank of India, to where maybe they'll make a statement saying like, we'll allow this and we're going to monitor this, and just a little bit more not so arbitrary, to where it's just like, no, we don't want it, and we're not going to deal with it, so we're banning it. And you got 3 months to wrap up all your business in that stuff. So that's what's going on in India. And like we're saying, some countries, they're taking these these new technologies to the forefront, and some are pretty scared of it, and they're going to run away. So that was what's going on there. And I guess just going on, we got these international stories. We got one more from Japan here. Bitbank over in Japan is launching a loan financial instrument. It's like I don't know, GMO back in April, they released an instrument to where people can basically put their Bitcoin in an escrow to where they get an interest, but it's only 3 months. Where here, Bitbank is setting up a loan situation where people can, provide this as well, and but it's for a year. It's for 1 year. You've got to have your Bitcoin locked up, and up to 5 Bitcoin, you get just a 3% return on the interest on that. So, and right now the details are kind of shady on whether or not you're getting that interest by the month or you're waiting the whole year before you get that interest. But nevertheless, it is something where, I don't know, it just seems weird to lock up that much Bitcoin for a year and hope that you're going to get that. But I mean, they do offer 4% for 5 to 10 Bitcoin and 5% for anything over 10 Bitcoin being stored into these. And how are they being stored? I don't know. That's another question, is like the storage on this. It's not really given that much detail, and probably dig a little into how Bitbank's current cold storage works. And I'm probably be upping the security on that if they're going to try and convince their customers to come over there. There's a little bit more of a vetting process if you wanted to participate in this program. And I don't know, Bitbank is probably just trying to stay competitive there in Japan. It's like there's, all these exchanges that are working with, guidance from the country, that they got it fully legalized over there. And so they're trying to stay competitive, I suppose, by creating this instrument. And I imagine some people will take advantage of it. I mean, to me, I look at it and I just think, handing over your Bitcoin to an exchange and then just letting them sit on it for a year and hope for that whole year nothing's going to go wrong with their cold storage, seems a little too risky for me. And I don't know, it's kind of got a little bit of that era of BitConnect in it, to where it's just I don't know, I don't like Bitcoin loans in general. But that's them trying to stay competitive. And that's what's going on in the other parts of the world when it comes to Bitcoin.
Mm-hmm. And the thing with me looking at this is why the fuck would you take a loan with such ridiculous terms for static interest like this? A lot of exchanges out there have lending programs, and depending on how the market is swinging, you can get a lot more interest than these programs are working with. I mean, it's just kind of not only do you have the counterparty exposure risk, but if you're okay with that, there are places, depending on how the market's acting, where you can get a lot more return for your money.
Well, I mean, keep in mind, the average bank account these days gets 1% of 1% interest on that. So 3% to some people looks really good.
Yeah, and you got to have a lot to just hope that 3%. I mean, yeah, I don't know. That's where I was looking at it. It's 3%. That just seems so low that I don't know who would take advantage of it. But I imagine they're putting it together because they have some clients that maybe are, maybe it's a well-established relationship over there with some Bitbank and some market makers, and they know that if they just provide the instrument, they'll buy it or something. Because, yeah, I mean, there's definitely lots of other places you could go to get a better return than 3%. And, I don't know. It's just the whole loaning thing. It's I don't know. Much more just buy Bitcoin and hold it. Don't loan it.
Mm-hmm. I mean, I don't know. It's just overall, unless they can lock out people from using similar products in other jurisdictions, it just seems ridiculously silly to me. I mean, just follow the market, and wherever there's the most demand for stuff, you're going to get the most interest.
Yeah, like I was saying, I mean, it's in Japan, and I think they're 31st by volume and the global volume of Bitcoin. And they're just, I guess they're trying to be competitive. You know, it's like if GMO is offering this, they gotta in turn try and create some instrument to offer it to their customers as well. I mean, that's what I'm guessing. It's like they're just trying to be competitive.
I mean, it's well, but I guess in other news, not really that shocking to me, although I do feel bad for anybody who may have actually invested in Tezos, but KYC requirements to claim your tokens.
Yeah, called that. It was coming.
And I mean, it's, you know, it sucks, and yeah, it is pretty much completely just changing the entire dynamic by which people actually spent money on this. But, you know, like with all of the shit going on with the Tezos Foundation and the Brightmans pretty much having a giant struggle where the Brightmans were trying to actually seize control and influence of the foundation and their funds when it was literally explicitly set up to firewall them from any influence over things. And the class action lawsuit pretty much alleging it's a security. I mean, there really was no other option for them. Like, if they did not do this, then they were pretty much just opening the door for them to get pretty much ass raped by regulators. But I mean, yeah, it's really like there was no way around it, but it's still kind of fucked up. And I mean, like the one thing I'm looking at is how is this really going to affect the chain period after it actually launches? Like every single participant in this chain who has access to their tokens is going to be KYC'd. Like this is a blockchain analytics company's wet dream. Like there will not be a single untagged user on this network.
Sounds like Kodak coin.
Right.
So I mean, I don't have any sympathy for them, but I have some insight into what they're going to have to deal with and why they're dealing with it. Because you may have noticed that they have a .ch domain. They are a Swiss foundation. And so people may be wondering, well, if they're in Switzerland, why do they have to do this? Isn't Switzerland like really lax about this? And it turns out that recently Switzerland actually, the Swiss regulators decided to impose a restriction on ICOs and tokens. I don't know if they do this for every single token, but I think in the case of Tezos, it was considered one of those tokens that had to go through this KYC process. And the cost of KYCing each person in Switzerland is $25 each person per person. That's like, that may, for people who are not familiar with like having to go through the KYC process, that's a lot of money, because in the US and other places, it can be pennies to a few dollars. So $25 is a huge amount of money. And Switzerland has basically done that, I heard, as a way to, it's like a soft barrier that, you know, only the companies that are willing to pay $25 per person that has to be KYC'd would get through that screening. So it's not a ban like other countries have done. It's like a soft restriction where they have to pay a certain amount of money to KYC each person. Or I don't know if they have to pay, but there is so much like paperwork and stuff in the whole process for each person costs about $25 that there won't be that many companies going through with it, because it's mostly, it would dry up any profits they were probably thinking of making from this process. So that's what I know about their situation.
Yeah, I'm with you. I'm kind of like not too much sympathy there, just because I mean, like Tezos was kind of like launched just in the midst of all the hype with the ICOs and everything, and I mean, it just, yeah, it had all that trouble with basically, like, I guess that one owner kind of running away with the money, and you know, it's already had some issues, but I mean, like its whole start was kind of just a little bit rebranded. Like it was like they'd already done so many fundraising rounds that it was like, we gotta, you know, come up with some sort of rebrand and then start over. And either which way, it's like a lot of money being raised, and you know, the regulators have come in since that launch. I mean, it has been something where we've seen, you know, people come in and ask for KYC AML on these tokens. And so, yeah, I mean, it's like, you know, they started with the fire, and now it's like the firemen are here. You gotta, you know, I don't know, you gotta play it the way they want. And so they got to get AML, KYC for all these guys. So yeah, it's, I'm going to say like it's tough or whatever, but I mean, that's the game they're playing. So I don't know. We'll see how they do.
I mean, it's like, you know, the whole project is a fucking joke. Like the entire system is pretty much set up with like voted people effectively acting as the arbiters of the entire network functioning. And I think there's like a year period where the Tezos Foundation is pretty much solely in charge of how things go on the network. And there's like after that some kind of process that they'll go through to either replace them or fill them in with other people or allow them to continue having influence. But I mean, it's like the whole thing's a fucking joke. Like it's entirely pre-sale. There is no real objective basis for the consensus project other than the foundation like dictating things. And then we literally saw the Brightmans, like despite setting the foundation up to leave them with no influence over it, get into a legal shit fit to try to insert themselves in the foundation in a position where they could directly control its funds. I mean, it's fucking absurd.
Yeah, it's just hilarious because all these people who are saying like Bitcoin needs a governance layer and all this, or like cryptocurrencies can't work without a governance layer where you have like a human element, like you end up with people like this who have their own major governance problems. They can't even like even the Brightmans who are a couple, they can't get along. Like how hard is this, people?
Yeah, it's hard work, man. It's hard work to keep, you know, incentives aligned. That's why it's like, you know, yeah, let's just focus on Bitcoin. This stuff is like, yeah, it's a distraction. And I mean, like, you know, whatever goes on over there, I'm sure it's not going to be that, you know, technologically revolutionary when it comes to the way that banking's done. So I'm not that interested in it, but yeah, it's like, you know, kind of like reap what you sow, you know. Let them wallow in it, play with it, see how they do. We'll catch up with them in 3 to 6 months.
Mm-hmm. I don't know, let's slide along, I guess. In other news regarding overreaching, invasive bullshit, the CFTC is subpoenaing Kraken, Coinbase, Itbit, and Bitstamp for trading data because, market manipulation that might be affecting the CME futures products.
That doesn't happen.
But it's like, this is just completely fucking absurd. Like, these exchanges pretty much had requests for their trade book for an entire day, all the trades, all of the people involved in the trades, a lot of which I imagine would like leak a lot of proprietary information, be sharing people's private information with third parties. And, you know, as Jesse Powell from Kraken said, that this new invasive request for information and declared oversight by the CFTC has them questioning, you know, what's the value versus the cost here of them even participating in an index for a futures product like this. And I mean, it's like, it's really fucking absurd. Like, this is like, anytime somebody gets burned in a trade, they scream market manipulation. Like, nobody will fucking take responsibility. You were wrong. Like, this is what trading is. You bet on something. If the outcome is different than what you bet, you lose money. This is how markets work. This is how trading works. And this is just particularly fucking insane and absurd that the CFTC is just demanding all of this private information from exchanges to deal with, air quote, market manipulation. When you have people like Brian Kelly on CNBC telling people how to buy the top on Ripple. And then, oops, it crashed back. Here's how to sell the bottom on Ripple. You have all of these fucking mainstream media articles just pushing out completely baseless bullshit. And instead of actually looking at media outlets that are just putting out false information and actually attempting to manipulate markets, you have them looking at the exchanges and the traders actually putting their fucking money where their mouth is, taking the risk and dealing with it. Like that's what happens. You put your money where your mouth is, and what happens. You deal with the consequences. And it's especially fucking absurd. Guess what's back? That's right. More Tether FUD. Hey, guess what, guys? What's that? The price went down and people buy Bitcoin with dollars? That's market manipulation. It's not the fucking completely biased and unfactual coverage by media outlets all over the country. No. It's people buying the asset that's manipulating the market. I mean, like, this is the most batshit fucking crazy nonsense in the world. Tether is a USD proxy. We've seen investigators from BitMEX Research literally tie bank activity in fucking, Caribbean countries to, hey, guess what? That's Tether. Bitfinex has established banking relationships with ING in Europe. Like there is money flowing in when tethers get printed because it's a lot more flexible in where it can move and facilitate liquidity for price discovery. But oh my God, when people take their cash, put it on an exchange and buy something, that's market manipulation. Like this is fucking absurd. Like like the people attempting to manipulate the markets are literally looking at traders and accusing them of what they're doing. It's ridiculous. Like this sentence here, Tether seems to be used to both stabilize and manipulate Bitcoin prices. Replace Tether with US dollars and see how that sentence reads. It is completely irrational. It is devoid of any logic or representation of reality in any way.
Well, that's what they just like to go off of, what's going on with the futures launch. The prices started to fall and they said, oh, well, everybody's, manipulating the price and they're making their money. And, I don't know, to me, it was like, there was a ton of news at the end of last year where it was just like every other day I was getting a phone call or a text message from a relative talking about they had seen Bitcoin, they had heard about Bitcoin, Bitcoin's on the news all the time. And it was definitely some moments there too where it was just like very evident of the manipulation as far as Brian Kelly buying Ripple at the top and selling at the bottom. And I don't know, to me it is like, let's turn a little bit of that focal point onto the media and see what happens. But I mean, like, they don't want to talk about that. They don't want to talk about media manipulating the way that people think because it's so necessary in the market today. It's really necessary that the people don't listen to their ideas and they listen to what's being told to them. So the actual numbers and stuff of people buying and that sort of stuff, the raw data, that's what they're going after. They don't want to go after the stuff that sort of, steers people in the wrong direction. It's, it's kind of upsetting to see from the CFTC. I guess they dialed it back a little bit in the information they're requesting, but still, like you're saying, I mean, it just needs to be kind of like a look on CNBC, Fast Money, like some of these guys, the way that they're manipulating the markets. That's a lot more, cut and dry. You could pretty much make the case in a court with somebody that, a judge that has least a fair balance on their head can see like, okay, there's some manipulation going on here with the way that these prices have panned out and the coverage of your stories. And yeah, you could look at that and you could see that manipulation, but you know, whatever. Got to pull out Tether, man. It's like Tether's around. Got to talk about Tether.
Well, I think they're confusing manipulation for
activity.
The activity that's normal. Like they're looking at Bitcoin through the lens of it being gold, right? So they think that it has certain implications against the VIX, the volatility index for the dollar. And like these things don't necessarily correlate. They are in a state of flux. So, I mean, it's silly to me to say that like this is what happened. No, there's a reason why people reacted in that way, and that it's hard to say that that's manipulation, because I know the general sentiment is that there are certain things you want to do in the market if you're looking at Bitcoin as if it were gold. So I absolutely don't see any manipulation there in terms of the way that this happened, and it just looks like a complete fluff piece.
Also, what I find really interesting is, the government is making, regardless of whether they're true, they're making these claims of being suspicious of market manipulation, specifically regarding Tether. But wasn't there a freedom of information request that they made recently that they actually denied? That they said, no, we're not going to share this information because it might reveal sources and blah, blah, blah. Like, if they wanted to, help the public out to, like, maybe stop some of this price manipulation and not get people fooled, if they're so worried about it, why don't they just tell us what they found in their investigation?
Oh, that's a very good point. That is an excellent.
Really good.
Like, they clearly have some like insider knowledge here that they're not willing to share with us. I mean, I think it would be relevant to whether there's, any price manipulation going on. I think, they should share that result with us so that we can protect ourselves.
I mean,
otherwise, I'm just going to assume they're bullshitting.
Yeah, I mean, that's kind of where I'm coming from. So.
Yeah. I mean, it's just, what they've had them under subpoena or something for a while now, something to where they've done some investigation and they can't let it all out. And so, that's where, it's like, I don't know, every time they bring up Tether and they're not really, telling the whole story, it's pretty evident. I mean, it's like, just start talking about your investigation, but they don't want to talk about that.
They have no interest in protecting consumers. Like, this is complete and utter fucking horseshit. What they want to do is they want to tag and identify traders. They want to start fucking harassing people. They want to start making the moves to lock people that they do not want in this market out of this market so that they can corner the entire price discovery mechanism. That's what they want to do. Like, the idea that they're trying to protect traders is complete and utter fucking horseshit.
Yeah, just like trying to protect the U.S. citizen from not allowing them to invest in some Fortune 500 company, but allowing them to buy lottery tickets.
Oh, yeah. And also to all the DOJ sock puppets who were making these public offers of whistleblower protection to people from these exchanges, we see straight through you.
You want to protect consumers? What the fuck about, Coinbase and Bitcoin Cash? What about that? It's, what? Insider trading? Launching something out of fucking nowhere and directly manipulating the order book so that it can only be pushed in one direction. Here, like when we move to the next, you guys just want to move along to the next story here?
Yeah, because they got a process, man. They got a process.
Yeah.
Yeah.
Here,
exploding right now. So give it some time. We'll probably have to circle back on this in a week or so.
No, but it's like, you guys remember the launch. Like people who are trying to sell. Nope, your order's not going through. I'm sorry. We're only going to let buys go through. Order book wiped out multiple times and fucking reset when things start going the other way. Well, hey, now they're going to start listing Ethereum Classic over the next few months. Another fork that they completely fucked up with and are just kind of throwing on here now. And I'm betting that this is solely to do with the fact that Ethereum is an unscalable shit show that is imploding on itself. And, you know, Ethereum Classic is the same architecture and likely to deal with a lot of the same problems, but their team has at least been a lot more cautious in approaching things and not just hand waving away the fundamental problems. But oh my God, what is this blog post? It's literally nothing but just look at us. We're not, or no, whoops, wrong one. Look at us. We're following procedures. We're being completely transparent. There's no insider trading here. Here is exactly the process where we'll list them on Coinbase Pro/GDAX, allow liquidity to build up. You'll see the APIs become available slowly as we integrate things. We're not going to allow it on Coinbase unless liquidity requirements on GDAX are met first. Look at us. We're being responsible, despite the fact that they did the exact fucking opposite with Bitcoin Cash. It is fucking absurd. They literally were manipulating the order books to only allow buys to go through, to push the price up to almost 3 times what it was on every other fucking market. Is the CFTC looking into this? No. Is any fucking government regulatory agency looking into this or taking this seriously? No. We want the Bitcoin trading data from these exchanges. We want the Bitcoin trader's identity, because people trading when there's a futures market based on it, oh, we're going to call that manipulation. They are completely and utterly full of fucking shit. This has nothing to do with consumer protection. This has nothing to do with market integrity. This is solely about cornering the markets and walling out the people they don't want participating. End of story.
Yeah, I mean, because I don't know, their process on this asset, ETC, started a long time ago when the fork happened. Like, they were very staunchly against ETC, and they weren't gonna. I mean, that was a case where it was like, were you gonna give your people that had Ethereum, were you gonna give them ETC, or was it like soon after that they launched Ethereum on their platform? I just know that, like, this has been a long time running, this process on this asset, ETC. Like this, they took a firm stance whenever it first came about, the Ethereum ETC fork. And they were very much with the Ethereum Foundation on running that, you know, Ethereum was Ethereum, and this thing nobody cared about, so it's not a point in listing it or anything. And now, you know, they're coming up to list it. So I don't know. There's been a long process in this particular asset.
I mean, I'm surprised it didn't happen sooner because, you know, I believe Digital Currency Group is invested in Coinbase as it is in a lot of companies. And Barry Silbert is a huge fan of ETC. That was literally the first tweet that he made when he came back after being, you know, on hiatus because of, you know, the fallout of SegWit2x. His first tweet back was about how he was making an investment fund and it was going to have ETC. And I don't know if it was in the same tweet, but he mentioned ETC and Zcash were the top two that he was focusing on. So not surprised at all. I'm actually surprised it took Coinbase this long to add it, considering all of the influencing factors. But for anybody who is not familiar with what happened with the launch or the inclusion of Bcash on Coinbase way back in I think December, we actually did an episode on that 65 with the Mahlers, and they were commenting on that. So if you're not familiar with that event, you can check back on that episode, Shinobi, if you want to show it.
Yeah, I put the link in the chat for everybody watching now, and it's just, if you go through the channel, it's episode number 65. But yeah, as far as the Ethereum Classic itself, and not me getting filled with rage about what the government considers market manipulation. Like, this is just so transparently a response to the litany of just completely unsolvable scaling issues on Ethereum. Like, you know, Brian Armstrong is a complete Ethereum fanboy. And despite the entire company literally being built on Bitcoin, making the vast majority of its money on Bitcoin, he has done everything he can to undermine Bitcoin and attempt to shove Ethereum to the forefront as the solution to the world's financial problems and the tool that will bank the unbanked. And it's not going to work. It is a fundamentally unscalable system, unscalable architecture. And they've dumped way too much fucking money into building out products and services reliant on this. So really the only alternative is Ethereum Classic. And I mean, in the long term, it's going to face the same kind of fundamental problems. But the team has actually been a lot more careful and long term in their thinking about how to handle them. And they don't just hand wave away the problems with a bunch of nonsensical buzzwords like boy genius Vitalik. They're actually trying to solve them. And so it's really the only option, considering how much money they've sunk into the Ethereum ecosystem. Like, most of the things are going to be portable or able to be made compatible with Ethereum Classic. They have to hedge that. Otherwise, every cent that they've sunk into that ecosystem is just burned money in the long term.
Yeah, Ethereum, man, it's going to be, I don't know, it's one of those things where such a long time ago, it's like, feels like, just like, man, just don't even really pay attention to it, where now it's like, I don't know, it is like kind of like just a case study, where it's like you got to follow it along all the way through its little process. And I mean, like, right now, it's like, you know, they're running up against another fork and they're trying to figure out what to do with their buddies at Parity. And, you know, I mean, it is one of those things where maybe the market will start to flip back towards this idea that Ethereum should be immutable, and, you know, maybe it'll start going that direction. And I don't know. It's just like, you know, I'm just thinking Ethereum's got a road in front of it, and, you know, ETC is going to be something that people will look at and say, you know, maybe this is an answer, or, you know, maybe this is something. I don't know. It's going to be a while, I guess, before we actually see Ethereum, I guess, finish or whatever, to where it finally runs to its course. I don't know how long that'll be. I mean, I used to think it wasn't going to take that long, but now I'm starting to wonder if it's going to happen in my lifetime.
It's really not the immutability that's the issue. It's just, it's not a scalable platform. Like, if anybody hasn't read it already, go read Stop and Decrypt's pieces on Ethereum scaling and sharding and proof of stake. Like, it is nonsense. It is not going to be able to scale as a coherent system.
Right. And I'm sorry, I was just going to say, like, yeah, you're right on that. I'm like, I was just going to say, yeah, that article from Stop and Decrypt was really on point when it says, like, you know, Ethereum's got scaling issues.
Mm-hmm. And I mean, it's like Coinbase is just a fucking shit show of stupidity. And I mean, you know, if you just look at everything that they've been doing, it's just scattershot. Like, let's try everything and something will work eventually. And now it's even gotten to that point with all of their attempts to push Ethereum as an actual viable solution to anything.
Oh man. Yeah. It's while all that stuff's going on, we got amazing Lightning satoshis.place, and, you know, things that developed that are, you know, I don't know, that's where I'm like really excited, because it's like we're seeing real scaling solutions at the same time that, you know, anything that pops up is going to show the scaling issues with Ethereum. So at that same time, we can say, like, yep, but look at what's going on with Lightning, and, you know, all this stuff that's, you know, it's good for the system. So still got the bad though.
Come on, Acnix.
Oh, dude, I can't get in it. People still have to digest the
There's no way you have nothing to say about Ethereum Classic.
Yeah, I think it's interesting now that the code base has started to diverge from Ethereum. So, you know, like it had to go proof of work, and now it's gone proof of work. That's interesting. I don't know. I haven't actually looked at the code too carefully recently. I've just kind of observed the repo and seen some of the changes, but it's a really interesting dynamic, just considering that like there's incentives at play there. And I think that we're learning what Bitcoin and blockchain really is. And as that becomes more innate, I think that we'll have to see that change in these two coins. But like I said, that manipulation thing we were talking about earlier, right? Like, these things are kind of tangentially related. And I didn't want to blow any more minds. That's why I wasn't going to talk about it. But I mean, that's it's interesting. And this is where it all kind of comes to a head.
Well, yeah, I mean, like the entire like birth of Ethereum Classic was literally in the midst of insane market manipulation. Like you had not only the Ethereum Foundation and a lot of people there with their personal holdings dumping the shit out of it. You literally had Vitalik and the foundation attempting to convince all of the exchanges to not list it, despite an insane amount of community support for it and lack of consensus on the entire hard fork for the DAO. Like their entire response was literally, no, everybody's fine with this. Don't list it and it'll just die. And we don't have to worry about, you know, the marketplace dealing with everything. Like, just don't list it.
That was like some of the most insane time, really. Like, just like the, you know, just seeing the DAO and then like seeing the fork coming up and then seeing all the press releases as far as like, you know, well, you know, we've run our you know, our little vote and we've got like 60% support, 63%, I think it was. So yeah, we're going with Ethereum. Nobody's going to mess with ETC. It's old news. It's the dead chain. Nobody's going to touch it. And then I think it was just like minutes after, it's like something was like, oh, well, Poloniex is listing it. And it's just like all of a sudden people were buying it. And it was kind of, that was a pretty crazy time. But yeah, it was definitely a lot of manipulation going on there when it came to, you know, the vote and the way that they, you know, the Ethereum Foundation wanted this thing and, you know, they were going to get it through however possible. And they did it. And I mean, that's why they have ETC. And, you know, yeah, the DAO is also just like a good case study for, you know, whenever a problem comes up and, you know, what could happen when you have like a centralized group of people that are responsible for all these funds. And that's what happens. And, you know, they get bailed out and now you've got two chains and it's, that was a hell of a time. It was like a month or so where it was just like, yeah, you would see somebody say something and then you could see the data was kind of going a different direction. And it was an interesting time.
Mm-hmm. And I guess, I don't know, slide along into other Coinbase news. Their weighted index fund is officially open for investors now. And we now, instead of just buying Bitcoin and gaining direct exposure to that, you can buy a share in their index fund where they'll water it down with shit coins that they choose to list or not based on their proportion of market cap. So we can make less money in the long term and they can rake in fees. I mean, like, this is literally the fucking, like, the stupidest thing in the world. And you know, and I think Kevin Pham actually posted on Twitter, like, where's my product to short this? Like, I want that product. I want to be able to short this.
Yeah, and I noticed Ethereum Classic is going to be included. I did not expect that at all. No. Didn't see that coming.
It's, again, them trying to hedge their bets now that they've sunk so much capital into like Ethereum. Like it's either pivot to something that's actually going to be sustainable and compatible, or they've just burned all of that money.
Yeah, I don't know what to say about another index fund and something else from Coinbase other than, yeah, like good luck with it. I mean, I don't know. I'm not even really good luck with it anymore at this point. It's just like, golly. Yeah, kind of sick of all this Coinbase nonsense, but I like the Ethereum thing. I don't know how much it's going to run its course for a long time, I'm guessing.
I mean, it's literally, they're just looking to fleece people for as much money as they can. And I mean, it's like the entire company was built on Bitcoin, generated most of its revenue through Bitcoin, and yet they seem to be dead set on attempting to undermine it as much as possible. It's like it is the most short-sighted, like irresponsible fucking nonsense ever. I mean, like here, we've spent a year now or more pitching this completely broken, unscalable piece of shit. And now when there's finally some realization going on internally, very likely this isn't going to work, we'll just pivot to the slightly more fucking rational version of that. I mean, it's like that company is literally like, it is nothing but bankers just attempting to slip in here and subvert things at this point. Like
circling the drain.
I want the ability to deposit Bitcoin to Square Cash so that I can cut my Shift card up and just be done with this company already.
We need a name for these companies that sit on the cusp of the event horizon of a drain that's just going down. They just sit right there on the edge.
Turds.
Yeah, so that's what they are. Coinbase the turd.
Mm-hmm. Well, I don't know. I guess the last story, I guess the least punch and probably getting me the least agitated. Apple is apparently banning any kind of mining application in their app store. And I mean, this is like the most ridiculous, silly thing in the world. Like, I can't
even get a Bitcoin ticker on an Apple phone, huh?
Like, first of all, like, what are you doing telling people that they cannot use their hardware for what they want for it? I mean, like just this kind of walled garden setup is infuriating. Like, it is my hardware. I should be able to do with it whatever the hell I want. And secondly, what the fuck would people even do this for in the first place? Like, there is like almost no coin out there that you could actually profitably mine on a smartphone or an iPad. Like, my desktop with a fucking pretty hefty graphics card and all 4 cores of its CPU going would barely make a few dollars in Monero in a fucking month. What the hell are you going to be mining on a smartphone for?
Apple coin.
Oh man.
I mean, I'm not really surprised. I mean, it's kind of the business model of Apple to make their devices as restrictive as possible. And in some ways, for some people, that is a benefit because it means there's a slightly lower chance that a malicious application is going to make it onto their device. That's part of their security model. On the other hand, Apple is just very protective about the things that it allows into its ecosystem because it has this brand of being super clean, white, hipster, and it doesn't want to, change that. So I'm not surprised. I'm surprised that people were trying to mine things on an Apple phone.
Oh my goodness. Like, I mean, yeah. I mean, it's not a surprise that Apple is going to say that this is not good for you. You're going to not do this and we're not going to let you. But I mean, like, I was looking at this and I was just thinking like, you know, there's that story that comes through like every few months about somebody losing money on a Polo app that's not really Poloniex. And I mean, like, I was just thinking maybe they're banning all these apps just to try and avoid somebody from losing money. But yeah, it is a lot of decision making for people. So it's yeah, that's, I don't know. I've always stayed away from Apple because I don't like them telling me I can or can't do something. So, but you know, yeah, I could imagine, I don't know, maybe in the future where there's like, yeah, there's Apple Pay and Android Pay. It's like we're gonna have to have our own little, you know, rooted little phones that can run our Bitcoin apps. I don't know. It's yeah, I don't know. It's Apple, man. They got their walled gardens.
Yeah, but I mean, it's like, you know, mining on a smartphone is a retarded idea, but hey, who the fuck are you to tell somebody they can't do something retarded with their own hardware? Like, they bought it, it's theirs.
Yeah, they don't want it to be. They want you to, they don't even want you to own it. They want you to lease it and not buy it outright. But was that it for today, or was there some more going down?
Nope, that's about it. Honestly, kind of a lackluster news period.
Yeah, you know, it's like like people are all in wallow over the price, I guess. I don't know. They just don't want, you know. But I mean, like, honestly, that's satoshis.place, and you know, just the idea of like, you know, a Lightning Network phone system where you can avoid spam that way. I mean, like, there's real interesting developments. It's just, you know, it's not all the hype and pizzazz of running through 20K and stuff. So, yeah.
Shinobi, didn't you mean to say that the show, the news for today was a bit flaccid?
Yeah.
All right. Well, I have
you want to go into thoughts?
Yes, I have your preloaded thought prepared.
I put it in the news desk specifically so we wouldn't miss it. So this is a documentary that just came out by Tomer. He's made a number of Bitcoin documentaries. Probably the best one would be the I Am Satoshi one. I think that was the title. I can't remember the title. It's really good. You'll find it on the I Am Satoshi YouTube channel. But this one is specifically about Kenya, and he spent 5 days in Kenya and was looking and interviewing people about the different types of financial services that are available, especially the ones that are very local and community run. And he also, towards the end of the documentary, was asking, like, how would Bitcoin be integrated into this? He was also asking people in Kenya who already use Bitcoin, some for a number of years, how it worked out for them and what work they were doing to get it adopted by more people in Kenya. So it's a very interesting documentary. I would definitely recommend watching it.
Yeah, I'm going to give that a watch.
All right, Acnix, Rick, you guys got any final thoughts?
I don't have a final thought link loaded other than just to, you know, final thought. I was thinking about doing this last week. I'll say it this week is, you know, tuck and roll. Like, that's kind of a weird final thought, but it's like, you know, whenever you're going through life, there's moments where things kind of take a dip. And whenever they do, you know, you can kind of see like things ahead of you are kind of becoming problems. When that happens, man, just tuck and roll, because, yeah, things start to get rough. Like, you know, things go in trends, and sometimes that trend takes a dip. And when it does, it's like, you know, I know that, you know, you guys watching, I've missed a few weeks, and coming back, it's like I moved, and then I had some family come visit, and then I dislocated a finger, and it was like all that move and the family visit was supposed to be like this really fun time, but it was busy, and then I dislocated a finger, and then I got a tragedy in the family to where I had to go back down to Louisiana to visit my family, and then on the way back home, I caught bronchitis, but the bronchitis is going away, the finger is moving again, and, you know, it's all really because I kind of had this system in place of like a routine and taking care of myself and, you know, working with the digest crew here and stuff. And, you know, when you start to see that dip happening, just tuck and roll and just like kind of get through it. And then, you know, on the other side, just try and bounce back up. because you know, yeah, I don't know. It's just one of those things where over the past month I've kind of been going through some stuff, and it's just like, man, what can I take away from this? It's just like, you know, whenever things get rough, just, you know, kind of just tuck in and roll into it and try and come out the other side as quick as possible. So no link, but that's a final thought.
Shinobi, we need that hugging bear gif again, because literally it's of a guy rolling into a bear. Tuck and roll into the bear.
I have an exit image planned already, and it is not.
No.
Yes, tuck and roll into the bear too, guys.
Acnix, cough up a thought. Come on.
All right. Final thought. There's manipulation, and then there's manipulation.
All right. And I guess, sorry for any audio only listeners. My thought is an image. I guess you'll have to go look at the last bit on YouTube. On that note, we will see you guys Sunday. I think we are officially moving Saturday to Sunday from now on. So catch you guys then.
Later, everyone.
Peace.